Okay, Kit, you are on.
Okay, hello everybody, and welcome to our IBD meetup, Madison Heights in Livonia, Michigan, for October of 2022. Tonight we have Raja, myself, Keith, Francisco, Henry, Taljet, Ron, and Cookie. As always, this content is in presentation should not be considered as a recommendation to buy or sell a security. All information is intended for educational purposes only and in no way should be considered investment advice. Here's our market status. The bulk of this presentation was prepared over the weekend, so it does not include Monday's trading. Market status, we're in a correction. Our last meeting was on September the 19th, and it's been a solid correction ever since. So nothing but 4 solid weeks of correction. Uh, our IBD 6000, we're shifting to the right. So our number of A's are reducing. We went from 463 to 392. The E's have increased from roughly 1070 all the way up to almost 1400, which is not good. Even though the bottom is, I don't think we're at a bottom yet, but today's price action may have changed it. But I tend to think the bottom is when the A's will be roughly 200. Just an opinion, though. Uh, Here's our Dow Jones Industrial Average over the weekend. The dashed vertical line is last meeting. The solid red line is when they went into official correction mode. So you can see it's continued downward, even though a few days it seems to have wanting to change direction, but not really. It's pretty solidly in a downtrend. The S&P 500, similar story. Here's our last meeting, and it's continuing downward. Uh, a blow up of that S&P 500, our last meeting. The green line is the 5 day. The 10 day is the pink line. So basically, it's been beneath the 5 day and poke through a little bit, couple of days, but then it went back down, and now it seems to be trying to pop above it, but it's overall it's just pretty solidly down, not including Monday's price action. Uh, Nasdaq, similar story, downward slope, very few blue bars, positive blue bars, but a couple of them. Here's our relative rotation graph from stock charts. This is our 1 month ago, 919, and this is our current 1018. We have the leaders is the UUP, which is the Invesco Deutsche Bank US dollar index. So that's right here leading the pack. Uh, XLE, which is the energy. Energy's coming on strong. Uh, Consumer discretionary, financial, and industrial are the leading stocks. Notice real estate, XLRE, has really taken quite a drop. XLK, which is the technology sector, really the chips are under a lot of pressure, but that's just kind of a different view of the different sectors. Financial is holding up pretty well, coming on strong. Here's our IBD 197 subgroups rankings. The 3 and 6 month sort. The yellow is energy or oil. So energy slash oil very strong. Notice the medical on the 3-month sort. We have 5 of the medicals. So medical is also very strong. Our last month's stocks, cookies and mine, we had it was a bad month. No question about it. It was a bad month. S&P was down 7% from our last meeting to today, not including Monday's action, but over the weekend. So the last month, S&P down 7%. Our top stock was OXY, up 3.5%. Next to that was almost even GMAB, GMAB, and then GPC. So here was our last meeting, and basically the red line is the last meeting, and it was pretty dismal. But we did manage to beat the S&P on some of our stocks. Some of our stocks had a worse month than that. On to cookie stocks. Okay, cookie stocks. Cookie has a number 1 pick this month. She has VRTX, Vertex Pharmaceuticals. It has a, let's see, subgroup 5 of 197. It has a lot of nice cups, cup with a handle, midpoint, nice flat base action here, 4% to a pivot, so it's right at it looks roundabout near the 50-day line, 95 relative strength, and overall pretty solid blue volume, pretty strong stock. Medical, it's actually medical biomed biotech. And here's the, fundamentally speaking, we have 41% earnings per share this year, followed by 7% next year, return on equity 28%, PE ratio 21, SMR rating, accumulation distribution A's and B's, very solid stock. 3,200 funds own this stock, as well as several A-plus funds. So this is definitely something you might want to keep an eye on. Very low debt, 5% debt. So this is a very powerful pharmacy stock. Another one from Cookie, NBIX, which is Neurocrine Biosciences, subgroup 5 of 197. Same group. Develops and commercializes pharmaceutical treatment, neurological disorders, psychiatric disorders. So it's got a nice base action here, just flirting with breaking out. It's still 1% in this pattern, so it's not extended yet. Pretty solid blue bar action as opposed to red bar. So it's the relative strength is 94. It's climbing, heading in the right direction. Fundamentally speaking, it looks like 6% earnings per share this year, gain from last year. And next year, it's supposedly 92%. So the earnings per share are going to increase quite a bit next year. Return on equity currently 15%, PE 61, 1,165 funds own it, including several A-plus funds, and smart rating and accumulation distribution A minus, very solid stock. Up down volume 1.8. So this is, very low debt, 24%. 70% of the funds own this stock, or 70% of shares are owned by funds, I should say. So this is something you might want to keep your eyes on. And another one from Cookie, IBEX, which is 96 of 197. It's in the Computer Tech Services Group, subgroup, Bermuda-based company that provides end-to-end technologies led customer lifecycle experience solutions. So it's a tech company. We got the base on base horizontally with a small gap in between. We talked about that last month. Nice cup with a handle. Relative strength 94 in the, I'll call that a 1 o'clock, nearly a 12 o'clock position. So that's about as good as it gets right there. Very strong. Coming up to the handle breakout. Good blue bar volume. Looks to be about a $19 stock. So looks good technically. Very nice looking chart. Fundamentally, we have $1.32 this year, which is an increase from last year. 2023, 11% increase earnings per share. And then they even have it out to 2024, 21%. So that's pretty strong. 116 funds own it. Very low debt, 2%. Return on equity, 27%. PE, 14. So that's pretty much, that's very good. That's very nice, what you want to see. Warren Buffett, Peter Lynch, they're somewhat value investors, and they look for high return on equity, which is this, and they want a moderate to low PE, that's what we're seeing here. So I would say that meets that criteria. Earnings per share growth rate 72. SMR accumulation distribution B plus. So this is very good. Very good, very good stock. Small stock though. No A plus funds as of the date I own this, but it still looks interesting. Another one from Cookie, STNG, Scorpio Tankers, which is subgroup number 4 of 197. Oil and gas transportation pipeline. So that they have the tankers. They actually have 124 vessels, oil and gas transportation fluids. Excuse me. Nice, straight, powerful. I mean, a powerful chart. It's just riding that 50-day. It seems to be, if it touches it, that's your chance to get it. And it's touching it right now, but actually it's come through a little bit, but it's pretty solid. 99 relative strength, again with that 12 to 1 o'clock position, very strong. 99 is the highest it gets. Nice looking chart. And fundamentally, we have they had a great year this year, supposedly going to be down a little bit, well, down 30% next year in earnings per share. However, it's still pretty much tops out their last 5 years or so. So it's still going to have a great year next year. They do have a 0.9% dividend yield. Looks like we have accumulation distribution B, smart rating, which is a measure, it's a blend of financials. It's a D. It's not good, but overall the chart the chart speaks for itself. Might be something you want to look at. Not outrageous debt, 36% debt. Now for my stocks, we have FBP, First Bank Corporation. It's got a long sideways base pattern. It's got the IBD blue dot, which is a kind of, it's a rare indicator. It's a positive indicator, 92 relative strength. It's got the blue, more blue than red, so it's really under accumulation. 9% to pivot, so it's not too far gone. Banks, FYI, this is subgroup number 4 of 197, so it's a top, it's a top, it's in a top group right now as we speak out of all 197 subgroups. So believe it or not, banks are on the move. Fundamentally speaking, this year they had a 13% EPS increase. Next year, projected 9% earnings per share. It pays a 3.2% dividend. Excuse me. Return on equity 14%, which for banks is it's not too bad. It's respectable. PE 10. Accumulation distribution A minus. SMR rating B, which is solid. 0 A plus funds own it though, just to be clear. And it looks like about 500 funds do own it. So might be something you want to look at. 18% debt, so that's not too far out of line. Let's see. Next on the list, we have Schlumberger, SLB. We have a sideways base. We have a cup forming, so it's really not a cup with a hand. It's not a cup with a handle, but it's forming a cup. And we have that gap in between pattern and pattern. It's actually 15% to the pivot, so it's still within the pattern. Let's see, subgroup 83 of 197. So it's better than halfway, but it's pretty much halfway, but it's better than halfway above the middle. Nice, good blue bar action here recently as it's advancing. They Schlumberger, they actually provide technology services, project management, and information solutions to petroleum industries worldwide. So they're like they're outsourcers, I guess you could say. They do the drilling, and they do a lot of, they take a lot of the load off of the big oil companies when they need the help. Fundamentally speaking, this year 59% earnings per share increase, followed by 39 next year. PE 27, return on equity 14, SMR rating, accumulation distribution B plus, and modest yield 1.7%. So 0 A plus funds, 89% debt. So it's getting up there, but there are 2,300 funds that own it. Might be something you want to look at. And here's another one for you. So this is WWE, World Wrestling Entertainment. Everybody knows World Wrestling, right? So we have a nice cup with a handle, big long cup with a handle. Then we have another cup, no handle, and we got that gap between them. 96 relative strength. So this is actually 85 85 of 197 subgroups, so it's right around the middle of the pack of the total stock population. Looks like more big blue bars than small red bars, so that's a measure of supply demand. But this is pretty solid stock. Fundamentally speaking, it's got the excuse me, it's got the return on equity 48%, which is a measure of profitability. PE ratio 29. So this is kind of, I'm reading this Warren Buffett thing, and this is definitely in his thing. And then this 29, he kind of dumps them as they get like maybe a little higher, but this is in line. He wants profitable companies, and that's what this is. SMR rating, accumulation, distribution, AA minus, good solid earnings. I mean, it's World Wrestling. I mean, the people that like wrestling, they love wrestling, and it's similar to NASCAR racing. Whereas they televise it, they come around to like a United States tour. They hit the big cities, and if you want to see it, they come to your town maybe once, twice a year, and you're going to take the kids to see it. Very profitable. If you like it, you love it. Something you might want to look at. Oh, and there are several A+ funds that own this. One more bank, ONB, Old National Bank Corp, which is 16 of 197. Let's see, they're out of Indiana, Michigan, and Kentucky. So you got a nice long cup, maybe a handle form, but it's still midway through the cup, still forming the cup, 13% to the pivot. So then we got that blue dot again on the weekly, 93 relative strength, pretty much 1 o'clock position. So it could use better or stronger blue volume, even though it is above the average. That line is the average line, but it's nice, tight trading patterns. And then fundamentally speaking, we have return on equity 10%, PE 11, smart rating, accumulation distribution, AB plus, very strong, 3% dividend yield, and earnings per share this year 9%, 14% next year. 0 A+ funds, 72% debt, so they do have more debt than that other bank we looked at, but something you might want to look at. And the last one here, we've looked at this before. This is CLMT, Camulet Specialty Products, 6 of 197. So they're a biodiesel converter. So they turn the French fry grease into aviation grade diesel fuel, believe it or not. And they got to deal with ExxonMobil to do it. They're actually one of the largest plants that actually do this in America. You have a cup with a handle, sideways base and a sideways base, and in between you have gap and gap. So it's actually pattern, gap, pattern, gap, pattern. 97 relative strength, 15% to pivot, pretty good blue bar action. Fundamentally speaking, now they haven't made money in the last 4 years, lost quite a bit. What their claim to fame is, a year or so ago, ExxonMobil was pressured by activist groups, and they actually got a couple of seats on the board, and ExxonMobil welcomed them, these activist groups, and they said, okay, what do you say we do? And this was one of the things they said they do. And Exxon said, you know what? That sounds like a pretty good idea. Let's go ahead and do it. And this company is benefiting. Next year, take a look at that. 2022, they're losing negative or 93 cents this year per share. Next year, going to flip it to $1.03, according to MarketSmith. So who knows? Maybe it's turning the corner. There are 0 A+ funds. They're not profitable right now, but I don't know. Maybe it's going to be turning the corner. Up-down volume ratio 2, which is a measure of supply demand. That's pretty strong. Accumulation distribution, they do have a B+ on that. Maybe something to take a look at. Not very many funds, though, honestly, own this. And then we have, okay, so with all the excitement and commotion in the markets, I looked at the treasuries. The treasuries have been getting a lot of attention, and this here chart is the yield that you would receive from buying U.S. treasuries at Treasury Direct. And this is time. So this is a 1 month, 30 day, I believe they call it a bill, 30 day, 3 month, 6 month, 1 year, 2 year, and then all the way down to 30 years. And here's the interest rate you currently receive. So actually a 30-day treasury bond or bill, it's roughly 3.25%. And you can see the 4.5% range is for pretty much 3/4 of a year up to maybe 3 years. You could actually get 4.5%. And then it dips down here, but the 20-year bond is roughly 4.25, 0.3. And you can buy them right through the Treasury Department. And actually, I did not know this, but they're $100 minimum investments. So they got it so where, I mean, anybody can really participate in this. And or you could buy them through Schwab or Fidelity with 0 commission if you're willing to invest $1,000 at a time. So I guess this is just a message. If you're panicking, maybe take a look at some of this here. It's just information. It's pretty basic to open up one of these things, and the rates are not too bad. Let's see. So my own, I have the, as I said before this year, the I bonds. I have some of those last year and this year. And the Treasury notes, I bought the 30 and the 60-day just to see what it was. Not much, but just to see what it was. And it's kind of an interesting process. They're sold at auction. So every Friday around 2 o'clock, that's when your price is determined, and it's posted right on your Schwab, in my case, the Schwab account. So take a look at these bonds. If if you're panicking and you don't know what to do, maybe put some of your cash in here. Maybe that's your decision, though. And as always, follow IBD market rules, track the distribution days, buy at proper buy points, and take profits regularly. And that's it for this month. Happy Halloween.
Thank you, Kate. Great information.
Okay.